Are you feeling the vibe? Are you feeling the weirdness? Are you feeling uneasy? Are you looking at little signals out there going, geez, what's going on with this economy? Gee, the market is so expensive and people are starting to lose jobs. And I'm doing okay. My 401k's up, but I'm getting this sense of being ill at ease. You're not the only one, not at all. I'm going to talk about that. And I'm going to talk about what the range of possibilities I see of what could happen and unfold in the coming months and what I think people need to be doing. And I think the answer is going to be the same that you've heard me say before, but let's get to it. So what I think people are sensing right now is a sense that there are multiple stressors going on in our country. There's political stressors. There's economic stressors. The U.S. is a very complex system under what would be referred to in systems theory as mixed transition stress, meaning, are we getting to a tipping point? That's always the question. So when you go back and you think about 2008, right, there were antecedent events. There were events that occurred before the big shift, starting back in 2007. That were little yellow lights, red lights. Oh my God, right? You started to see an uptick in defaults in mortgages. You started to see things wobble in the financial sector. Then you got Bear Stearns going down. Then you had Lehman and AIG. Nothing just like melts down. We didn't even get to our low till months and months after the AIG bailout. These things take time to unpack, but everybody knew, like everybody could sense something was off. And we're getting that something is off vibe now, right? Simultaneous strain. And that's coming from now this new government shutdown, job losses. Job reports are not fabulous. Tariffs, bond market stress, regional banks still fragile, surging food prices, rising foreclosures, reading about that now too. And of course, the threat of healthcare costs skyrocketing, which is also tied to this shutdown, but nevertheless. So the concern, it would be that there would be something called a failure cascade. And a failure cascade is small shocks tipping into a systemic collapse because the system is already brittle. You also saw that happen in the Soviet Union. And you saw that happen in, I think it was Argentina in 2001. And I think Soviet Union was in the 80s. So all of a sudden, one day it's fine, the next day everything's different. It's never really like that. There's always stuff burbling under the surface. So that's what people are feeling now. They're starting to feel the bubble and churn and all this stuff happening under the surface. So what does that mean for you, right? People go, well, what do I do with my portfolio, my financial life? Give me a minute. I'll get there. So let's look at the assessment of the risk. So we've got complexity science. It's a valid theory. USSR 1991. Sorry, that's what it was. 1991. And Argentina 2001, financial sector 2008, where all of a sudden one day it just collapsed. You see this in environmental science too, where all of a sudden the ice shelf just falls apart after years of it kind of cracking under the surface. Government shutdown. Does that lead to systemic collapse? It hasn't in the past, but there's arguments to say that this is different. It's plausible but extreme. Bond market panic. Mass dumping of treasuries, our treasuries overseas, is less likely because it would hurt the sellers too, right? Particularly China and Japan. It's an overstated risk, but not impossible if confidence really collapses here. But we all go down together. It's like sort of like that song by Billy Joel. He said we'd all go down together. Yeah, pretty much. So is that likely? No. Is it impossible? No. Food security crisis. Okay, so now we're going to have food security issues. You're already seeing stuff with farmers in the Midwest, some of the smaller farmers, food inflation, trade disruptions. Are we seeing shock predictions and costs? I mean, it's fairly grounded, right? So food insecurity, though, in the U.S. tends to be distributional. It affects poor households the worst, which is not great. So I think you're going to see that wealth disparity expand. Now with this whole thing with the military, is there going to be a politicization? Is that how you say it? Militaries do resist that. I don't think that all of a sudden the military is going to collapse or something is going to go crazy there. We have redundancies built in. I'm not saying it's perfect, but I'm saying I don't see an imminent collapse there. So by definition, given those factors, I don't see some imminent mass destruction in this country. But there are real fragilities. There's real wealth disparity. There's the debt ceiling brinkmanship, the inflationary effects. I don't think a worst case collapse is really real. So again, goes to my mindset that things are usually not as good as you'd hope, but they're often not as bad as you fear. I think that's the philosophy I carry into the markets as well. How this manifests, like what do we need to do? If we're looking at our Best case, status quo. Moderate growth in equities resumes. We have tech bubble maybe deflating a little bit. Treasury yields are stable. Yields drift down a little bit as inflation cools down. Currency remains pretty strong as a global safe haven. I don't think that's going anywhere. Commodities are volatile, but nothing cray-cray, not a response to huge inflation. So that would mean stay diversified. You lean into quality equities. You keep some inflation hedges. You don't overpay for safety. Like that's a standard issue advice, blah, blah, blah. Base case, this is where I'm living. Base case. Rolling crises, because this is what we're going through now. We had April in the markets, took a dive. April 8th, we were at our low. It was a little ugly, okay? Stagflationary stress. Been talking about that since March-ish, okay? I think that's a pretty high probability. I think that what that means is that shutdown debt ceiling is going to create periodic shocks, volatility cycles. Food and energy inflation persists, but it's not catastrophic. Localized bank failures may be drags on commercial real estate. You're going to still see political purges that's going to continue on unless this administration changes all of a sudden, which I don't foresee. How does that manifest in daily life? Housing, grocery, healthcare costs are squeezing you more. Periodic job losses in certain sectors. More risk aversion, consumer confidence kind of shrinks. Yeah, you're still buying Christmas presents, but maybe not as many, right? You start to contract a little bit. That I definitely am already seeing. So the investment implications for the middle of the road plan, this sort of like pseudo stagflationary plan, well, there's going to be choppy markets. Defensive value sector outperforms growth. Rates are volatile. Long duration bonds under pressure, like that right out of the gate. Currency means USD weakens modestly. What do you do? What do you do? Jen, all this talk, what do you do? So you have a diversified portfolio. You get a little more defensive. You make sure that you are represented well in defensive equities, that your dating on bonds isn't too far out, that maybe you have some real assets as an inflation hedge or dollar hedged holdings, avoiding overexposure to super speculative stuff. That's it. That's it. As I said in another video, if you think that this is the end of the democratic experiment, then you shouldn't be worried about the markets and you should start planting victory gardens. You could drive yourself crazy. It's a short drive to the funny farm if you start in on that line of thinking. So you have to deal with what's in front of you. You're going to maybe have to cope with some price spikes or shortages or layoffs or some instability, some protests, loss of trust in institutions. We're in a cycle right now. That's where we are, sadly. But does that mean it's going to be the end of the world? Unlikely. Those never guarantees. Again, we're in a globally intertwined economy, and what happens to us affects everybody else as well. And trying to extract ourselves and go into this sort of isolationist, mercantilist mindset, it happens. We go through these cycles, and history will tell you that it has certain effects on the market. Now, I'm not going to get into the politics of it. I have my own opinions, doesn't matter. How we react is what matters. So again, I say to you, if there's major collapse, it's not going to matter. If you're fully diversified, you're going to want to do that whether we're in an economic upswing or a downswing. Maybe there's some rebalancing that you have to do. Maybe you look at your risk appetite. Maybe you look at things in your financial plan to consider building more ballast and security in your holdings, use of insurance, or just making sure you save more, making sure you diminish your consumer debt. Maybe there's a little more urgency around that right now, making sure you have adequate cash reserves and that you're getting some interest on them, right? That's the thinking. That's always the thinking. It never changes. And there's a reason why. It's because it endures. It endures. Is it perfect? No. Is there going to be parts of your portfolio that would underperform in certain environments? There always is. There always is. Think of it this way. Here are your principles. Some liquidity to make sure you meet your immediate needs for an interim period, whether it's a year, 6 months, whatever makes sense for you and your life to cover your core expenses. Reduction of consumer debt, high interest debt, credit cards, just don't do it. This is not the time to take out $1,000 a month car payment. I don't think this is the great time for that, unless you have a lot of money. I wouldn't recommend sticking your neck out too far. Making sure you have a diversified portfolio that aligns to your risk appetite. And I couldn't possibly tell you what that is. There's a lot of you out there, but that's something a good financial planning process will reveal. And then you could figure out your buckets of money and how each of those things should be managed. So it doesn't change those core principles, but in fact underscores even more the necessity, the importance, the vitality of a good strategic financial planning process. Never more important. Never more important than a time like this. The insight is it's probably the middle way, not as bad as you think it could be, not as great as you hope it could be, and a plan, financial plan that is prudent and aligned to your goals and your needs is always the best strategy. Hi, I'm Jennifer Kirby from Talisman Wealth Advisors. Sometimes I go out of pocket, but I do love a good financial and economic discussion. So if you like that and you think I'm interesting, or there's something that you get out of this, please be sure to comment, to like, to share, and to subscribe.